Welcome everyone to the Moneycontrol live stream. You're watching the opening bell and I'm your host Nickey Mirchandani. While markets are poised for a rebound after 4-day losing streak, SGX Nifty 2 has indicated a small bounce coming in for the markets after the initial rout. US markets have ended in green on inline inflation data and US banking stocks have staged some recovery as the jitters around the banking turmoil settled a bit. In terms of the neighborhood markets, the Asia Pacific markets did in green following the Wall Street, and Moody's, however, has downgraded overall the outlook on the US banking system from stable to negative. In terms of the FII's data, there's been the sellers for the fourth consecutive sessions. Foreign institutional investors have sold in shares worth around 3,086 odd crore, and DIIs, however, have been buying shares worth around 2,121 odd crore. So, but in that, let us get going and discuss some stocks and strategies today with Rajesh Palviya, who is the head technical research at Axis Securities. Good morning there.
Good morning, Nickey.
All right, so you resume back from a long vacation. I'm just going to start. A lot of things have happened when you were you were away. Benchmarks have hit a fresh 5-month closing low on Tuesday. You think Nifty would be able to defend that 17,000 mark right now?
So, yeah, we have seen, very tough time for the market since last couple of weeks, and almost we have tested the level of 17,000 in the previous trading session. But still, if we go with the data setup, short build-up was clearly visible for both the indices in the previous session also. So Nifty and Bank Nifty both have witnessed, increase in open interest. And the price has fallen for both the indices. So it clearly shows that shorts are still intact in the system, though both the indices are in oversold trajectory on the near-term setup. But still shorts have not covered their position, despite Nifty has almost achieved this lower target of 17,000, which is almost very important, as well as the psychological level for the market. So looking at the overall setup for Nifty, we believe that, if at all any pullback comes, as we are having some positive cues from the global market. So if we have any kind of pullback towards 17,150, 17,200, 250 zone, again, it's going to be a shorting opportunity in the market, as the overall structure is weak and shorts are already created. Most of the call writers are aggressive at 17,200, 17,300 strikes, so which clearly indicates that, market is going to witness a resistance around 17,250, 17,300 zone in the near-term setup. The major short covering action we can expect only above 17,300 level. So that level is very crucial for any kind of pullback if we witness in the near-term basis. And on the other hand, if we breaks below 17,000 level, then possibly Nifty can continue its down move, and possibly that the next target for Nifty in the near term could be 16,800, 850. We can expect in the near term also if he breaks below 17,000 level.
All right. Also, your strategy coming in on Bank Nifty, because they have continued to witness selling pressure from higher levels and have also tested the support zone of around 39,500 to 39,400. What's the strategy and the immediate RSI levels on that one now?
So looking at the Bank Nifty setup, yes, it's again in the bearish zone on the near-term setup also. And looking at the overall scenario, a lot of call writing activity is happening at 40,000 strike, 40,500 strike for this series, so which is likely to act as a major hurdle for Bank Nifty. There was some resilience we have seen in the previous session, and some recovery we have seen in the previous session for the Bank Nifty. So looking at the overall setup, now if Bank Nifty manages to hold about 39,400 on the future side, then possibly some pullback action we can see in the Bank Nifty towards 39,900, 40,000, which is again, a stiff resistance for the market. Though RSI was in oversold zone, some recovery was there. Some mechanical indicators are also witnessing that, some divergence are already there in the Bank Nifty. So possibly Bank Nifty can give some bit of pullback from the current level. But again, I'll reiterate, 39,200 has to be stop loss if you are buying at the current level. and 40,000 is the immediate target where one should book the profit in the bank Nifty, because a lot of call writing activities is still there and short covering is still absent in the system. So today's session is very important for the bank Nifty.
Sure. Okay. Also, I'd like to understand from you any top 3 trading strategies that you could help the viewers right now to make a little more profitable trades at this point of time.
So 3 stock idea. One is short side, that is Mahindra and Mahindra. In the previous session, we have seen strong selling pressure was there. Short built up was clearly there. Stock is now slipped below its 200-day moving average. On the weekly chart, stock has given a breakdown to its multiple support zone on the weekly chart. So looking at the overall setup for Mahindra and Mahindra, we believe that furthermore selling pressure we can expect in this stock. 1120, 1110 could be the possible target in the near term on the downside. One can go short M&M future with stop loss of 1195. The stock which we like on the buying side, that is Cummins India. Strong uptrend is continue in this stock. Series of higher top, higher bottom formation on weekly and as well as on the daily setup. Looking at the overall setup for this Cummins India, we believe that this upward momentum is likely to continue, and we are projecting target of 1740 to 1760 on the higher side. One can go long in this stock with a stop loss of 1655. And the third stock, again on the buying side, that is SRF. Especially in the last trading session, we have seen strong buying action, and now stock is penetrating its 100-day moving average. We believe that if stocks continues to trade about 2300 in today's session, then possibly furthermore buying, follow-up buying we can expect in the today's session, and possible target on the higher side is 2350 to 2380. One can buy with stop loss of 2270.
Right, Rajesh, thank you so much for that. But please stay with us on the sidelines. We'll quickly address top movers of the day, and you can pick and choose a bunch of stocks that look attractive from the chart side as well. In the bunch of stocks that we'll be addressing will be IT, telecom names, Maruti Suzuki, Cipla, Elgai Equipments, Texmaco Rail, and engineering, amongst others. But first one, we're going to be talking about the whole telecom space. There's a report which came in from CLSA where, Reliance Jio has announced in a couple of the postpaid plans, there is this new tariff hikes which come through. Per se, they have announced that the new entry family postpaid plans will be now available at Rs 399 and additional 3 add-ons on connection for overall the Jio family postpaid plans that have come in at 99 per SIM. Now, total monthly charge will be for 4 prepaid connection also in the new plan would be at 696. Now, they have introduced a higher price family postpaid plan, which is at 699, and also the new individual postpaid plan from March 22, which will start at 299. Now, this implies a 50% hike coming in from the current 199 tariff plan and the new entry family postpaid plan. In fact, that will renew the expectation of the subscriber gain. Also, this is comparable to something like a Bharti Airtel and Vodafone, which offers these plans at around 999, and Jio's 50% individual postpaid tariff hike will make entry plan comparable to the other peers, something like a Vodafone Idea, something like a Jio. Now, with this tariff hike, this also tariff hike will cut Bharti Airtel's tariff premium from 100% to 33%. So overall, keep an eye out on the bunch of these names coming in. Also, what is interesting on our list is Sona BLW. Now, do remember, Blackstone actually exited 20% of the stake coming in, in trade, and we've seen significant volatility playing out for these counters, right? We've seen some amount of declines coming into an extent of 12 to 13% in the last 4-5 trading session, and a sharp recovery coming in after Blackstone exited. Now, Jefferies has initiated a buy on this one, and the target price is to an extent of 575. They're saying that they like the strategy of the company of expanding its component portfolio to address intensifying electrification and the trends overall in the global auto sector. They've also spoken about the overall large order book, which provides the revenue visibility coming in for the company. They expect a 31 to 40% revenue and EPS CAGR for the next 3 years. Speaking about the valuation, they think it's rich at this point of time, but they also expect these valuations to sustain given the strong outlook. Also spoken about the PLI benefits, and they say that this PLI benefit poses an upside risk coming into the estimate. Also, we'll be talking about Maruti Suzuki, where promoter Suzuki, has bought in more shares. 3.45 lakh shares have been bought in from open market. From March 10 to 13, promoter has been actively buying, and with this, Suzuki Motor stake stands increased to around 56.5% as compared to 56.37%. So a bit of increase out there, clearly that you can see, but there has been some amount of activity coming in on that one. But you're going to be quickly waiting on the sidelines to see how the markets fare. Will they be able to snap that 4-day losing streak or not? It's an important day in trade today when it comes for Bank Nifty Index. So we'll see some amount of support also probably being lent by Banking Nifty or no. That remains to be seen. So clearly we are waiting on the sidelines and waiting for markets to open just to see if we can get a positive start coming out of markets after 4 sessions of drubbing. Markets has got significant momentum thus far. If you talk about Nifty 50 index, well, that index we're seeing gains coming in. Well, 0.75% of gains, more than that for Nifty 50, 17,200 mark. Now that's been taken over. So clearly a good start coming in for the market. Too early to rejoice, clearly, but we'll see how the momentum builds up for the entire day. Let's look at Bank Nifty index, because that was a level. Rajesh was talking about how important it is for Bank Nifty today to lend some support, and there you're seeing the gains out there, more than 1% on that one. So clearly remains to be seen if we can be, inching closer to that 40,000 odd levels, but clearly, support coming in on that one. PSU Banks, we're seeing more than 1.5% gain out there. So clearly we are seeing the momentum coming back, maybe gradually, to the markets after 4 consecutive sessions of dropping. You talk about the Nifty Auto Index, that's also lending in, right? Some participation coming in even from the Auto Index. You're seeing close to 1% odd gains coming in on that one, and Metal Index too seems to have participated to the rally. 1.5% gains coming in for that one. So clearly it looks like a positive start, and IT, which witnessed a lot of drubbing, there was a lot of concern around the mid-cap IT space with the US banking crisis. Well, 1.3% out there. You can see the charts are all in green. Defensives, FMCG too, for that matter, 0.5% of gains coming in even on the Nifty FMCG index overall. Market breadth is extremely positive right now. 47 advances as compared to just 3 declines. So you can clearly gauge that market has stayed some amount of smart bounce back after what you've seen for the last 4 sessions. Talk about the gainers and losers on Nifty 50 index thus far, just to see how the market momentum has fared, just to understand the flavor of the markets and the texture that we're looking at. These are some of the counters that we're looking at. Adani Enterprises, well, that makes it back to green. Adani Enterprises, Adani Ports, support coming in on IndusInd Bank. So let's see how financials are stacking up thus far for you. Also, let's bring in Maruti Suzuki, where the promoter has been, probably buying in more stake from the open market. So you're seeing some amount of recovery out there. Hindalco and UPL too have been participating into the rally. So you can clearly see the momentum building in for the markets right now. Titan, Asian Paints, Tata Steel too, they're top of the list. As the market breadth is positive, right? You've seen 45 advances as compared to 5 declines. So you'll see majority of Nifty 50 index right now, the whole pack in Bharti Airtel on the other hand. We addressed the whole telecom thing today, right? Where there is a high coming in and more market probability. Competitive edges coming in from Reliance Jio. Bharti Airtel, it's down and out by more than 2%. Sun Pharma is again also taking it, to an extent. It's one of the top losers. Relative underperformance, I would say, but not exactly, sharp losses coming in on that one. So clearly some amount of negative momentum too there, but overall, the market breadth remains positive. ONGC, you're seeing some amount of flattish to negative bias, but nothing sort of a day when it comes to the losers, right? Bharti Airtel is something, and the entire telecom pack is something that we need to keep an eye out on. Apart from that, we'll also be looking at RIL. How is that doing in trade today? Because it remains to be seen if we're also seeing participation coming in from Reliance thus far, which has lost 10% on calendar year-to-date basis, it's come off 15% from its peak that we've seen in November, but remains to be seen if today the Reliance has stayed some amount of smart recovery. So clearly, we're looking at RIL and seeing the momentum building up on that one, if at all. But Rajesh, I'm just going to quickly come back to you and ask you about what do you make out of the markets right now. Clearly, Bank Nifty, that was the index that you were clearly keeping an eye out on. Do you think 40,000 level will be easily scaled, passed through in today's session?
So post-opening, yes, 40,000 is likely to act as a resistance, as we mentioned earlier also, that major call writing activity is there. But yes, after the opening, some short covering is there in the system. But again, we have to wait for another 10-15 minutes, what kind of short covering we see in this 40,000 call writing. So if at all Bank Nifty crosses this 40,000, then it's going to be a very interesting day today. And then possibly another round of short covering we can expect throughout the session. And Bank Nifty can then move further higher towards 40,200 to 300 zone also. So 40,000 is the immediate level where one should keep eye. If Bank Nifty manages to hold that level for next 10-15 minutes, then yes, Bank Nifty future can be a index where one can initiate a long side trade for upside target of 40,200 to 300. At this moment now, our stop losses, we have trailed at higher side. And now we are placing our stop loss to remain on the long side at 39,800 on the Bank Nifty future for upside target of 40,200 to 300.
All right. Also, your view coming in on IT stocks, especially something like in mid-cap IT space, which has taken a lot of drubbing. Just 30 seconds on this before we address the fundamental story.
So still there is negativity in the mid-cap IT stock. A lot of stocks have witnessed a significant supply in the previous session. So Coforge is looking still weak, and we believe that if it continues to trade below 4,000 level, then possibly it may further go down towards 3,800 to 3,750, which is the next level on the Coforge. LTTS is also witnessing supply pressure on the higher side, but still. As the stock is trading below 3,700, again, it's going to witness a supply pressure around those level. If LTTS breaks below 3,600 level, then it's again, a shorting opportunity below 3,600. Then possible target for LTTS is around 3,540 to 3,520 on the lower side.
All right, Rajesh, we'll leave it at that. Thank you so much for taking out the time and speaking to us this morning. All right, that's part of the show where we address the fundamental story out for you. Enough has been said and done when it comes to the overall U.S. financial crisis. But how does that actually have a bearing on Indian equities? Is it just the banking sector and the IT sectors which are, that seemingly seem to be a little bit of impact coming in on these two sectors? Let's actually find all the answers to this one from Gaurang Shah from Geojit Financial Services. Good morning out there.
Thank you, Nicky. Morning to all of you all.
Right. I'm going to start off by asking your initial assessment overall on the IT space and the mid-cap IT space. Soon, we've seen enough amount of drubbing which has come through on these ones on account of their probably interconnectedness in the, in the U.S. markets. What do you make out of this? And, upcoming results too. There is a preview coming in already for these companies. How do you expect the quarter to fare out for these companies?
Well, so, Nicky, we as a brokerage house have been positive on IT, even when the entire world was underweight and was advising to stay away from IT sector. And those were the times when you had the IT index correct 25% and some of the IT stocks corrected more than that on backdrop of dismal performance in the financial year gone by. And even in this financial year, if you have to look at the first and the second quarter numbers for the IT companies, they were disappointing. But third quarter, what we witnessed is there is meaningful turnaround. And suddenly, the view on the street has also changed and people have become positive on the IT sector. Two important counts that we believed by our conviction on the IT sector will play over a longer period of time. One was because of valuation. And the second one is the need of the hour of the platforms and services and products that the IT sector delivers to the entire world. And given the kind of current environment of spam and, cyber attacks, I think one has to keep their IT platform and environment so secured and safe that the person using it does not feel, cheated or let down with. Having said that, this entire saga of Silicon Valley Bank and the so-called assumption on the street that IT mid-cap companies will be badly affected. To be very honest with you, since Friday, when the news broke out of SVB Bank in US going belly up, I don't think any of the relatively IT focused mid-cap IT management companies or management has come on board and have said anything very serious about it. Please correct me if I'm wrong over there. Only names like Nazara Tech, etc. I think even over there the damage is going to be bare minimum, if that damage is going to happen, because the depositors, according to the authorities in the US, have mentioned that they have access to their deposits. So it's not like there is a big lock on the doors of SVB Bank wherever it is situated. I think this is more of a knee-jerk reaction. Managements have not come out and said anything, especially on those companies which we have a positive coverage on. For example, Persistent System, KPIT Tech, Tata Elxsi, Coforge, Cyient Limited, LTI Mindtree. None of these companies management have said anything about this particular episode. So I think it's a knee-jerk reaction. It's a great opportunity to accumulate IT stocks if you have a year and a half kind of a time horizon. I think this is a good bargain hunting kind of a time when there is so much of fear on the street and people just don't want to get anywhere closer to the stock market.
Right, that's the word coming in on the mid-cap IT space overall. Enough is said and done when it comes to the beating that we've seen overall for the counter since the start of this SVB crisis. So clearly we need to keep an eye out on that one. But also what's interesting and has actually behaved otherwise is PSU banking index was the story in 2022, but in 2023 we've seen absolute amount of profit booking coming in on that one. No per se, most of the analyst community suggests that the banks at this point of time are well insulated. But what do you make out of it? Do you think PSU banks, we can see more amount of, how are the valuations stacking up for you, and how are you looking at the space right now?
So honestly, I will say that we need to come out of this herd mentality behavior that we have got inculcated in ourselves so deep down inside that it's very difficult to uproot it. Not only the banks management in India, but even some of the foreign brokerage houses have done study on this, and they've said that the Indian banking sector, be it private or public, is very well insulated, and the domino effect or the chain reaction of the fallout, even if some more banks have to fall in US because of the SVB bank, it's not going to be anywhere close to seriousness. And I think we will come, unscratched as far as this entire saga is concerned. Before this, there was one more episode in form of one of the biggest corporate houses in India and the report of one of the foreign entities. That had a fallout. So you had the banking sector in the very near term suffer from a wound of, two-blade knife. If I have to purely reflect on the earnings for this entire financial year, first, second, third, and very soon by mid of next month, April, we'll have the fourth quarter earnings unfolding. And we have a very strong and serious long-term commitments as far as public sector banks are concerned, be it private or public. Moreover, whatever happened in form of merger and amalgamation for the public sector banks have now started to play out so well that their slippages have come down, their net and gross NPAs have come down, their provisionings have come down, and because of effective management of advances and deposits and CASA ratio, that number is also looking very, very strong, which is translated into very strong, net profit numbers. And if I have to look at credit demand, I don't think credit demand is going to die down. In fact, it's going to multiply to a higher level, which will have better NIMs for the banking sector. So you have State Bank of India, Bank of Baroda, Canara Bank, Bank of Bank of India, PNB as an investment idea from the public sector bank universe. Amongst the private sector banks, you can pick your choice, starting with HDFC Bank. Now the merger will also go through. Then you have Axis, ICICI, Kotak, IndusInd. Some of the small banks, we like Federal Bank, IDFC First Bank, City Union Bank, to name a few. So my sense is that this is a great opportunity to even And I would say, I will even go to that extent that it's, banking sector is going to be must in one's portfolio.
That's clearly some call out there. But what do you overall make out of the realty space right now? Last year they said they're going to be unaffected with the kind of rate hikes that are coming through. This year there have been many beliefs that maybe probably with the kind of selectively US banking crisis that we're looking at, rate hikes might actually slow down. With that in perspective, do you think this is the year probably where rate sensitives will shine brighter as compared to the belief of defensives now making a comeback? What's your opinion on that one?
So, investment is all about one's risk appetite, investors' risk appetite. Now, if you are not adventurous and if you want to, have a limited return and want to be relatively, of course, there is no word like safety in equity markets, but if you really want to be insulated from the volatility, then you can opt for defensives. Not that there is no risk over there, there is, but the risk factor is a little bit lower. If you have elevated risk appetite and if you want have the desire of making a little bit more, then definitely you have to go for riskier sectors and companies. And real estate sector, in that perspective, is still a high beta sector. Though there is a lot of discipline that has come into this particular sector, but it is still a high beta sector. Your question on the interest rates, well, if I have to go by the verbatim and the comments made by the Honorable RBI Governor, Mr. Das, and we'll have policy unfolding in the month of April, I think we are somewhere close to, putting a pause as far as the interest rate hikes are concerned. If the monsoon does not have to play a spoil sport, and if El Nino effect is going to be dying down, and if we get even normal or just below normal monsoon in India this time around, then I think the fears of inflation number going up because of, agri commodity prices moving up will be put to rest. That means that the elbow room or the comfort zone for the RBI with respect to inflation number is going to be at par, or they are going to be at peace, if I can put it that way. So you don't have that, rising interest rate scenario. If that happens, and even in the rising interest rate scenario, I think mid-size or, mid-level and higher luxury and luxury level demand for apartments as far as residential premises are concerned has been relatively higher. My sense is that if you have elevated risk appetite, then Godrej Properties, you have Shobha Limited, you have Prestige Estates, you have Oberoi Realty, and these 3-4 companies that I've mentioned, they have relatively lower debt on the balance sheet. Leverage is absolutely not there, and the run rate as far as completing the project is concerned is much better than the industry standard. So my sense is that these are the 4 names that you should look at. You should definitely avoid, entities or companies which have excess leverage, which have, not so proven track record.
Sure, Gaurang, also your word coming in for the auto space right now, probably the promoter, Maruti Suzuki's promoter has picked up a small stake. It's a very minuscule amount per se, but that's never happened in the last 16 years. You're seeing some traction building in on Maruti Suzuki along with the auto space, because there have been a couple of re-rating reports coming in even on the auto space. What do you make out of it? Do you think there is further upside to the rally, or you think we're kind of overdone with that?
So I honestly, I wanted to bring up this auto sector, and it's good that you have asked me a question on the auto sector. Now I will put some things in perspective. I think beginning of this year or somewhere very recently, we had the Auto Expo in Delhi. Right from all the categories, be it 2-wheelers, be it 3-wheelers, be it 4-wheelers, as far as PV is concerned, be it tractor, agri equipments, or the larger size, vehicles like commercial vehicles. All the companies have given you a feeling that they are going to have multiple launches this year and following in couple of years going forward from here on. The waiting period has not come down. Let me be very, very honest with you. The issue with respect to semiconductor chip or supply side logistic issues have got resolved or have come down to a greater extent. And companies are launching. In this month itself, what I'm given to understand is you are going to have anywhere between 4 or 5 or 6 launches happening. and followed by many more in the next couple of months and years to go by. Demand is there. That is why companies are launching, and that is why the waiting period is more. Pricing power has come back because some of the companies have actually revised the prices upwards as far as some of the vehicles in certain categories are concerned. And the very fact that you have many more launches happening tells me that auto sector is definitely going to be in the spotlight, especially likes of Tata Motor, M&M, Maruti. Yes, Suzuki buying a small stake or small percentage does not really signify more, but it only reinforces the confidence that yes, they are in back into the growth trajectory. The only sad part was they have delayed their venture into the electric vehicle segment, but now they have mentioned some of the launches by end of 2025 or mid of 2025. And in the two-wheelers, I think the rural or semi-India economy improving will first translate into positivities for two-wheelers, be it entry-level, mid-size or high-end segment. Very recently, we heard yesterday Harley Davidson launching 350cc motorcycle at the price tag of close to 4 lakh rupees. I mean, these companies are not crazy that they would launch in a market where they don't see future. They are launching that kind of a product in a market like India because they see tremendous amount of potential. So my sense is that auto sector is something that you should definitely be focusing on.
All right, Gaurang, we'll leave it at that. Thank you so much for taking out the time and speaking to us in the morning.
Thank you. Always a pleasure. Thank you.
All right, with this is a wrap and goodbye from the entire team who puts this piece together. Thank you so much for watching. Please do post your feedback for us in the comment section below. Follow us on the link at the bottom of your screen. And for rest of the updates, stay tuned into moneycontrol.com and Moneycontrol app.